Hello.
Good afternoon.
Hi. All I see is only me and you.
Yes, it is.
Mhm. Because I was on early and I didn't see anyone. I said, "Oh, I must have said I was in no class today."
That's what I was thinking too. I said because I came on 5 minutes after, and I said they must have made an announcement. The class was canceled.
Yeah, I guess I didn't know. 'Cause I came on. I was on, and then Miss Miguel even came. Mr. Pratt even come and say, "If we ain't having no class," I say, "Oh, I don't know." You got your results?
I did. Thank you.
Well, because I don't think anybody did terrible, so we will start with, we won't go from 1 to 10 or 11. We'll just, what chapters we do now will be what the exam will be on. Yeah.
Awesome. I don't know if I can make it.
Pardon
If
me?
we, I say awesome because I don't know if I can make it if we go from one all the way to 10, 12.
Yeah, no. Yeah, yeah. Like, well, tonight is just really talking about regulations, the Basel committee, um, different acts like poker. So, well, we hope others joined. Yeah. Did you
Okay.
get a chance to peruse the chapter?
Yes, I did.
Mhm. Yeah, because we, as you see, time is rolling by. So, and I think I think for my business of banking class, that's a holiday. So they're gonna have to have the exam on the same day as your as risk, because I am not gonna take it over to. I class finish the day the class finishes the day that I do my exam.
Okay.
Yeah, I don't go on for another week or so before I do an exam. So we have to
Okay.
just get through the chapters, and once we get through the chapters, yeah, yeah. Well, I guess I don't know what's happening tonight, but everybody must be stuck.
Yeah, there was a lot of traffic on the road.
Oh, okay, probably that's the reason. Yeah, that's the reason then, I guess. So you work close by, or you say you got home early.
Oh well, I left work from 4:30. No, from 4 o'clock.
Oh,
Sorry. So give
okay.
me a little time to get home. I don't work close. I work downtown and I live in the east.
Okay. Yeah. Yeah. Well, we'll see. I guess we give them another 10 minutes or so and see what happens. If not, us two can have glass.
Okay.
Uh, well, someone else just joined. Hi, Miss Nan. I wondered if we weren't having class today.
Good evening.
Hi. You got your paper back? Your results back?
Yes, ma'am. Thank you.
Like I was telling Miss Cartwright that we exam will be from, I think, chapter 6 onward. Yeah.
Okay, awesome.
So we have to try to at least finish, because like I said, April have holidays. So yeah. So um and I think with my business of banking holiday is Monday, and that's their last day of class. So I guess they'll be doing the exam that Tuesday when y'all do it on the 18th.
Oh,
Yeah. I know some of y'all are doing other classes, so that'll give y'all time with y'all other class. But I usually do my exam the last day of class. I don't try get on until another week. My class finish on the 18th. You get your exam on the 18th, so at least by the 20th, I finish mark it, send it into BIFs to be cross marked, and then be able to get your results once the paper's been cross marked with someone else. Unlike someone in my other class, my business or banking class, they were asking back for the midterm because they wanted to check to see where they went wrong. But midterm and final papers never given back because a lot of times we use them over or we shuffle it around. So I don't give back midterm, nor do I the finals don't come is given back either. Yeah. But for the most all of you did well. So we'll just do from chapter 6, I think, from chapter 6 to chapter 10 or 11, for the final exam. Miss Knowles, did you get your paper back?
Yes, ma'am, I did. Good afternoon.
Hi. I thought we weren't having class today because it was Sunday, me and Miss Cartwright on. I say, ooh. Even Miguel, Mr. Pratt say, no class today. I say, Charlie, must say, I sign off so much time. I say, I must be on the wrong link. Yeah. So y'all got a chance to look over chapter 8. Talking about banking regulations. I think we have 2 more persons, Miss Burrows and Miss Colette Knowles say. Yeah. So we'll just give them, ooh, time is already passed. Anyway, they'll come along. Okay, so chapter 8 deals with banking regulations. And as we know, banking regulations are done by the Central Bank of the Bahamas. And so with the regulations, we'll see that's what Basel, I don't know if any of you ever heard about Basel 1, Basel 2. Basel 3 should soon be, I guess, out there for the banks, from central banks soon. I know around the world I see Basel 4 and all, so, but I think we're just going on to Basel 3 here in the Bahamas. So what is Basel? Basel 1, banks that operate internationally are required to maintain a minimum of 8% of capital based on a percentage of risk-weighted asset. Basel 1 is the first of 3 sets of regulations known individually as Basel 1, Basel 2, and Basel 3. And together they form Basel Accord. And as you would see in the introduction, an agreement in 1988 known as Basel Accord, which incorporates Basel 1, Basel 2, and Basel 3, marked the start of international standards for bank regulation. Since 1988, bank regulations have been an evolutionary process. New regulations modifies previous regulations. So because of new regulations, the old ones, they don't throw them away, but they're still there, but it's modified. The old regulations are modified. But many of the approach used in previous regulations have usually been preserved. In order to understand the current regulations environment, it is therefore necessary to understand the historical development. This chapter explains the evolution of the regulatory environment prior to the 2007 credit crisis. And we know the credit crisis was, it dealt with the LIBOR and the credit in the mortgage market, where a lot of persons, like I would have mentioned to you before, a lot of persons lost their homes, especially in the UK, because of the LIBOR rate. The LIBOR rate was hacked, rigged, and so persons who were able to qualify for a home when the LIBOR rate was rigged by two persons, two individuals, and it was not picked up, a lot of persons were able to qualify for mortgages. But when the truth came to provision, a lot of persons lost their houses in the UK, especially. They lost it. The credit crisis, the credit crunch. Yes. So a lot of persons lost because when they were able to qualify for 600,000 because of the LIBOR rate was hacked, when it was actually found out and it was fixed, a lot of persons could not pay a mortgage payment for 600,000 when they were probably paying 2,000, 3,000, when the rate was actually fixed the way it should have been. Persons could not afford to pay that loan, you know. So that's what happened with the credit crisis. And this chapter starts by reviewing the evolution of bank regulations between 1980 and 2000. It explains that 1988 Basel Accord, which I say Basel Accord again, is known as the Basel I, Basel II, Basel III, which is a major overhaul of regulations and was implemented by many banks throughout the world in 2007. Finally, it reviewed Solvency II, a new regulatory framework for insurance companies, which is broadly similar to Basel II and is expected to be implemented by the European Union in 2016. So Basel is the regulation which is used around the world. And like I said before, um, perusing the internet, I saw where Basel 4 is also out there. So, and Sandra, I don't think here as yet we started to use Basel 3. Basel 3 should be coming on stream soon. What is regulations? What do you, Miss Knowles, what do you think regulations is all about when it comes to, I guess, with the central bank and the private and the public sector, like the banking industries? What do you think regulation, what is regulation regarding those industries?
Okay, I think regulations have to do with the rules that central bank would create for their private and, I guess, public bank, which would be in accordance to the AML and the compliance laws with FIU, I think it is, and then the
Yes,
Basel Committee and what's not.
yes, it's that. The term regulation generally refers to a set of binding rules issued by a private or public body with the necessary authority to supervise the compliance with them and apply sanctions in response to violation of them. In short, it is a formal rule that governs behavior. So if the central bank was in there to create rules, what would happen? We would send money out of the country, any amount we want to, like before. And that's why you see in 2000, everything started to change. They started to implement compliance, started to implement rules. And so before persons could have come into the bank and deposit whatever amount, because I remember when I first started working in Finco, it wasn't no rules. So persons used to come. I remember there was a guy, he came from one family island. I went into my boss office and I looked and I was like, well, Jesus, what all of the whole entire floor was covered with money because there was no rule. So he used to come, bring the money, put it in, whatever proceeds it was from. It was an ask. It just, oh, you want to open up? You have a bank account? Yes, just deposit. You deposit in what? 500,000. You deposit in 1 million. Just deposit it. But after 2000, all the rules and regulations came into play because of money laundering. And we know money laundering plays a big role around the world. Most industry sectors have some form of means by which regulation exists, either in the form of broad principles or the provisions of detailed rules and regulation. Many take the view that there is no need for formal externally imposed regulations in any market, be this financial service or any other, and essentially self-regulations by the various parties to the transaction will take place, resulting in the market finding its own balance. Others, taking the view that all parties to transactions are not equal, believe some forms of regulations or rule setting are necessary to provide fair balance between the various parties. And yes, so rules in place. So the central bank have rules in place that it protects not just the customer, it protects the bank and the customer. And so that is the reason why central bank exists, because it's not just there for one body, like we'd say the banks, but it's there to also protect the customer. Because as we know with central bank, for many of you, if any of you worked in banks, you know that when customers don't use their accounts for a certain number of years, like 2 years, it becomes inactive. And then after that, it start a dormant status. And then after that, after 7 years, if nothing, no activities, nothing has been happening on the account is then is cheated to central bank. And you would have heard, like probably sometime last year, they had so much money in that dormant account balance because customers, a lot of them might have died, and then you have customers who just don't remember, or they open bank accounts, they put money there, but their children or their family members is not privy to knowing that they have it. So some persons die, and so as long as they still had funds and the dormant charges didn't depleted it, they, once 7 years, the banks exceeded to central bank, all banks, the beginning of every year, January, I think they, an escheated list is dropped, and the total dollar value in the banks has to send it to central bank. I don't know if the process still remain, but I know when I worked in the bank, that's what had to happen. And escheated list and all escheated accounts went to central bank. And if a customer, because the banks will send out dormant forms to say you need to come in to reactivate your account, and customers just don't pay attention to it, and then some persons would come in. So the ones who don't go into the bank, their accounts get cheated to central bank, and then they would have to go to central bank to actually retrieve their money from them. Any questions? Anybody have any input regarding regulations and just what I talked about with the dormant accounts and escheated accounts? Miss Knowles? Miss Claudette Knowles?
Good evening, good night. Apologies, I came home from work late.
Yeah, you got your results?
Dormant accounts I'm familiar with. I know there's there's just one question I have to ask about them. Dormant accounts, I know it's after 7 years.
It's cheated. Central Bank. We call it as cheated. It goes to central bank.
Oh, that's what it's called. So once it goes there, what then happens?
Well, you remember central bank got that whole big, I think they were using it, taking money out of it last year to do some stuff. But yeah, central bank, that's their money. If you don't go get it, central bank, I think millions of dollars in that account. Millions of dollars in central bank escheated that account, because every year all banks have to send an escheated list drops, ID drops an escheated list, and then the operations person makes sure the totals in the accounts, and it's just escheated to central bank. Because like I say, a lot of times people account come dormant and it comes inactive in 2 years and people still don't. I know there was a gentleman, he had over $300,000 in his account, and I was calling him when I worked at the bank, and he said, what? So he forgot he had that. I was like, you forget you have $300,000 in an account in a bank? Yeah. Mm-hmm. So he forgot he even had that $300,000 in the bank. Yeah.
I know when I was working in accounts, one of the things that I did was that we had to do a research to check to see if they had passed away or they died.
Right.
We had to show that we made effort to locate and find them prior to sending it to central bank. I know one particular lady, we had sent her money. She had buku money. And and that 300,000 is a joke. She had a little over $2 million.
Whoa.
Yeah, because she had gotten, her son had passed away, died, and she had gotten double. So she didn't realize how much money she got. She just deposited the check. And we had ended up sending it to central bank. If central bank had it, must be 2 years. And finally, someone must have knew her, and she came there and she said she did have an account, Baba, and so we directed her. But what we sent is not what she received. How is that?
Oh, I don't know. How is that? Central bank has charges up because they hold the accounts? I don't know. I'll make a note of that to look. Okay. So y'all would have sent 2 million and she received 1.5 million.
No, it wasn't that big of amount missing off, but we disclosed to her what we sent because I think we had to. I don't know, that's our operations department.
Because then she has to go and say, my name is Colette Knowles and this is what my bank said they sent to you, because this is what would have dropped onto the escheated listing. When the ID generates, that would have been on the escheated list, and that's the dollar value what was in our account, and that's what y'all said.
And she had all of the documents, because you know you have to have a declaration to say where the money came from and whatever. Yeah. She still had all of that, but she didn't read the fine lines to say that since he died accidentally, that the money had doubled, and he had like a couple insurances, and they came up to like 2 million some.
Whoa.
Yeah.
She probably didn't need no money. Wow. She probably didn't need any money.
That's all I kept thinking. Really nice thing, but she had a lot of income properties, so maybe not.
Okay. Yeah, she didn't need it. Yeah, she didn't need it. Yeah.
And he was the only child and was just her.
Whoa.
So I think that's where it got lost. And that's where a lot of the dormant accounts why they happen.
And too, a lot of times too, with the dormant accounts, people die. And you have your mother, she opened an account, she never told nobody, she just saw on the account and she dies. And so, you know, if you want to, when you even have to do a probate, you know, probate take a long time, and you know how much money you got to pay to do a probate. And then you don't even know how much money she has in the account. So on doing a probate, you probably probate and she have probably $4,000 in the account. And you don't know what a probate will cost you, how long it's going to take lingering in the courts, and how long the lawyer is going to take. So what's the use if, you know, you're going to go and do a probate and come to find out you're paying the lawyer more than what was in the account?
But if someone leaves a will, why do you still have to do a probate?
I don't know, but I think that's the reason why they always stress the persons to always have another person on your account. So you don't have to go through all of this probate and stuff, because if somebody dies and nobody actually have cash and this person had all the money there, some banks allow persons to get it because they say, okay, this is for a funeral, and they don't have the money to pay it. So banks sometimes waiver, and they allow the customer next of kin, as long as they bring the will in, to say, okay, yes, we'll release a certain amount so you can bury the person. Yeah. So some banks do that.
Yeah, we do that.
Yeah. And so, however, both sides have in common a belief in the market itself, the need for trade, for exchange, for transaction. Regulations, whether formally imposed or informally imposed, agrees upon, is intended to facilitate this. So we need regulations. If we don't have regulations, banks can do anything, customers can sue, so regulations is needed. And that's why you see when you open accounts with banks, you have to sign that agreement form. And a lot of persons, like we always say, we don't read the fine print. So a lot of stuff in the agreement form we don't pay attention to because we don't read the fine prints. But if you have an account and you're not using it and it goes dormant, dormant charges comes off. So if you had like $300 there and you're using it, when you get back to the bank and saying, oh, I left 300 dormant charges, you weren't using it, so the account went dormant. And after all the funds is depleted, the account is automatically closed. If it's before, if it closed before it gets a chance to be escheated to central bank, because dormant charges took all the funds. And like I was saying with Basel deals with the different supervisory committees. Like Basel is a regulations, and like I said, I don't know, Miss Knowles, if y'all use Basel. Most banks using Basel 1, Basel 2. Basel 3 is, I guess, on the table and should soon be out to the banks. It's on the table. They've been doing for 2009. I remember them talking about Basel 3, and Basel 3 still has not. But I think around the world, I saw where they're using Basel 4 and all now. So we are behind the 8 ball. The need for regulations. Why the need for government and monetary authorities want to regulate financial institutions so closely? We have to first look at the economy and the money flow within, which all includes credit creation and essential trust that we show in the banks before we invest our life savings in them. The central bank and other monetary authorities regulates financial institutions to eliminate or reduce risk. Regulations to protect users and providers of financial services can aim at transparency of information and insurance for deposit. Right. Do any of you know about the deposit insurance and what it's all about?
It covers the deposit of up to 50,000. So if the bank goes bankrupt, they are obligated to give me back 50,000. So if I have 100,000 in one bank, they're only gonna give me 50,000. So if I spread that amongst different banks, yeah. Now if I'm in an account, I'm not quite sure on this one, but if me and you are on an account and you don't have anything, then you get the 50. Then that account also will get 50,000. Right. Okay.
And that's why the deposit insurance came into play after Gulf Union Bank.
Yes.
When Gulf Union Bank went belly up, and that's why when we talk about risk, reputational risk is something that can put any business out, because guess what? One person just said, oh, I heard Gulf Union is closing, and they closing. Oh, and I have my money there. So a lot of persons rushed to Gulf Union. That line was, they were then by where the Hilton is, who's there now? Cash and Go, somebody's there. Scotia was there. That's where they were, the Gulf Union Bank. And a lot of people lose their money in Gulf Union Bank somebody went to jail and all for that. So a lot of people lost their money in Gulf Union Bank. Yeah.
Yep, I
And
remember that.
yeah, a lot of persons, just like our Clico is took a lot of people money. That's the same thing with Gulf Union. A lot of persons lose their retirement, their money, lost it because there was no, and what is hard to believe that central bank no they gave no fair warning that something was wrong. And so after that scenario, that's when they had to implement the deposit insurance. So it's still like if you have $1 million, you gotta be throwing that all around the place to be able to get some money back. So if you have $1 million in one bank, you're only getting 50,000. If the bank go in liquidation, you're only getting 50,000. And so most banks you go into, you'd see on their wall the deposit insurance there. So anytime you see the business license, you'd see they should have the deposit insurance also to show customers that the bank has the deposit insurance there. Such transparency can be at a level of the customer, such as advising the customer of any fees and commission that the provider will earn based on the customer's choice of products is essential. This allows the customer to make more informed choices about products and compare them with other providers. This both aids competition and promotes fairness. There are rules which prevent insider dealings, where bank staff or customers with private information about a company or a share issue either buy or sell shares, knowing that there will be a share price raise or fall when the news is made public. Though the word and through the word of and focus on specific objectives, many differ from jurisdiction to jurisdiction, and regulators to regulators. The essence of these objectives of regulation remain constant within the regulatory environment, are the key consideration for all stakeholders in it. Like they say, if I may have mentioned it to this class, but I know in several years past, Commonwealth Bank had that insider trading. Somebody who was a manager in the bank was able to tell the broker what was going to happen. And so now you need to purchase because the shares going up. So you need to invest more. They went to court. I can't remember. Nobody went to jail. I think they may have had to pay a fine, but I'm not sure. But two of them, one was a Commonwealth manager and one was a broker, investment trader broker. Do you know
Correct.
anything about that, Miss Knowles?
Yeah, that happened in 2000 and 2004, 2006. A lot of no, it was only top management who was involved with that, not line staff.
Yeah, but I remember
Yeah,
the one person from Commonwealth, he was a manager, and then I know
yeah.
the guy too, who was the broker. Both of them went to court. I don't think nobody went to jail. I think they
No,
may
he
have to
didn't
pay
go to
some of the
jail.
money. They had to pay the
No.
money back or pay something, do something. Yeah, I
They had to
remember that.
turn in the manager had to turn in all his shares because what it was he was purchasing shares and getting other
Yeah,
managers to purchase it at the reduced rate with the staff rate, and then they would
hmm,
sell it.
yeah,
And
yeah,
yeah, so
yeah.
now
I couldn't
they are a
believe
little
that.
strict on that.
Yeah,
And that was a
and I would
senior
have not, I
manager.
would have not expected that from him, nor the broker.
Oh
Yeah.
no.
Yeah, both of them, I was like, whoa. Yeah. But if anybody, you can always read up on it. It's there, public knowledge.
Yep.
The need for regulations. The recent global financial crisis has led to ever more emphasis being placed upon the achievement of these objectives. The mechanism by which they are to be achieved are being revisited and in many cases are being found seriously wanting. encouraging a wide range of readjustment in approach and focus to the channel by which these objectives should be achieved. At the international, national, and sector level are undergoing scrutiny from many angles, namely by government regulators, businesses, and consumers. The impact of this scrutiny and the changes it brings will be felt for many years to come as the regulatory environment adapt and no doubt adapt to reflect it. So regulation is totally needed in anything, in a business, if you in schools, in a business, if you don't have rules and regulations, like, okay, say for instance in a bank, okay, a customer comes in, you have products and services that you offer to customers, there are fees, and I know you remember last year or year before, people were complaining about the different fees that banks are charging. Like, I could tell you one bank, I went to cash a check from somebody. I think it was somebody paid me a check and I went to cash it, and the young lady said, you have to pay $5. I said, I have to pay $5 to cash a check with somebody from your bank gave me. They said yes. So Royal Bank was doing the same thing. It was like, and it's a lot of persons made it, spoke out against it. And I think at that point, some of those charges and fees that they were charging, they had to pull them back, so that's why we have to have regulation. We have to have regulatory bodies like the Securities Commission, the Insurance Commission, the Registrar, the Central Bank of the Bahamas. So we have to have regulatory environment watchers so banks, investment companies can't get away. And not only that, they have to be competitive. And sometimes in being competitive, you can't, I'm giving one rate and we're both purchasing the same security, but you're quoting one rate to your client and I'm quoting a different rate, but we're both purchasing the same security on the same market. Yes, so that's why central bank, the Securities Commission, you'd see sometimes the Securities Commission investigate some persons, you see them bring them up or to for investigation. So it has to be rules and regulations. Other than that, what would happen in any business, any country? Okay, well, Miss Knowles, can you pick up it? That's supposed to be Basel Accord, BASEL. Or Colette Knowles. I forget. I have so much Knowles. Miss
Okay,
Knowles.
Basel, you mean Basel 1?
Yes.
The key to the system is to maintain.
Hold on, no. Oh,
What?
It's Basel Accord Bahamas.
Oh, Bezac Accord Bahamas. That was the name. Okay. In 1992, the Bahamas implemented the 1988 Basel Capital Accord. Basel, the central bank monitors compliance with Basel I on a quarterly basis as part of the review of the financial conditions. To date, however, the 1996 amendments to Basel I related to market risk and netting arrangements have not yet been introduced. However, a capital charge for market risk is scheduled to be introduced in 2004. After appropriate studies are carried out to determine the licenses for which market risk is a material consideration. Basic, due to Bahamian exchange control requirements and the limited capital markets activities of banks in the Bahamas, the bank expects that domestic retail banks will be below the Basel material thresholds for market risk. Additionally, the liability-driven nature of international offshore banking in the Bahamas has led to capitalization levels which are considerably higher than 8% minimum risk asset ratio requirements. Therefore, for the majority of the Bahamian licensees, the introduction of Basel II, which mandates an additional capital charge for operational risk, should not reduce the capital ratio of offshore international licenses to levels of concerns.
What is operational risk? Where does operational risk come into play in any institution?
Is that the amount of funds that you're required to hold in?
No, that's when you have to hold liquidity. That's your liquidity. But
Right,
operational risk
right,
deals
sorry.
with us, human working operations happening where we make errors. So risks, we could get sued, banks could get sued. So it's operational risk where human factor comes into play.
That's
So
like if you
operation.
deposit funds like to the wrong account,
Mm-hmm.
or
Yes, they call it
or
clerical
paid a
risk,
check
but
that wasn't
operate.
signed
Yeah,
or something. Yeah.
yeah. And we call it clerical risk too. But like we know, we have situations where customers, um, not customers, but yeah, sometimes customers, they transfer money, and especially now where you can transfer money from your account to another bank, and an error transfer money to someone else's account, or say you go to your payroll department and give them the wrong number. So now you're getting paid at the end of the month. So what happens, they put the money to a wrong account, but it wasn't their error, it was you gave them the wrong number. But in the banks, someone should pick it up, because at the end of the day, in the mornings, they peruse the account, so they should see, well, hey, why is this going to Paulette Knowles' account when this is for Andrea Smith, and the number on that account does not match the name. So that's how errors are sometimes picked up, and when errors are not picked up, what happens then? A customer comes in and say, oh yeah, my daddy was supposed to send me that money. Oh, he finally sent it, and they withdraw and they withdraw and they withdraw. So what happens? If the customer can't bring the money back in, the bank is liable because the error was not picked up. And I mentioned to y'all before about a situation where two brothers, they were twins, identical twins, and one was off to school, one lived here. The mother was on the account with the one who was off to school. I hear feedback. Hi. The mother was on the account with the one that was off to school. And what happened is that the one who was here, he was on drugs, but his hands were broken. So when he came into the branch to do a withdrawal, because he knew persons who worked there who knew him, and so they were saying, hey, and when he tried to sign, and the teller would say, well, oh, the signatures don't match, he would say, hey, don't I know you? Yeah. And she was just coming initial thinking that was the other brother, but this was the brother who was on drugs, and he totally cleaned that account out. But who was responsible? The bank was liable because the human error, the staff who identified him, and he took all the money. Hi, feedback.
I think I come
Yeah.
for her.
Yeah. Yeah, so that's operation risk. That's a risk. So the bank had to pay the money back, because they could have taken him to court as much as they want to. He didn't have the money to put it back, so the bank was liable, and they had to pay that funds back to the customer's account. And like I say, there was another situation where the ATM had a glitch. And because the ATM had a glitch, and a lot of customers realized at one bank that I worked at, and the customers realized that the ATM had a glitch. If I have no money on my account, I have $50 on my account, but I went to my account and I was able to take off 500. And so when persons realized that, they went back, and there was a taxi driver, his account was overdrawn like $30,000. he was able to take all that money from the ATM because of the ATM glitch. And I don't know if up to today they recoup any of the money back. A lot of persons did that. A lot of persons, they had a lot of persons in court because persons just realized, oh girl, I went to that bank and I was able to take this. Or you could go to any bank just using that bank ATM card and you were able to get money. And so when people realized they could do that, they were just telling their friends and families, and everybody was just taking money. So it was a project that I had to work on, and there was a lot of money that was taken from the bank um, through the ATM because of a glitch. So we always talk about human error, technology too. Errors occurs. Miss Knowles, you could continue for me, please.
Sure. Okay. So Basel 1. The key to the system is to maintain capital adequacy. This means that each bank must have sufficient capital to match at least 8% of its risk-weighted assets. That's it right there.
Yeah.
Capital is a balancing figure in the balance sheet and relates to the difference between assets and liabilities. It also represents the shareholders' funds equity for the purpose of the accord. It is split into tier 1 and tier 2 of capital. Okay. Tier 1 capital, okay. Tier 1 capital consists of items such as equity and non cumulative perpetual preferred stock. Goodwill is subtracted from equity. Tier 2 capital. This is included undisclosed reserves, subordinate debt, and general provisions. Profit put aside to cover provisions for bad loans. At least 50% of the capital must be tier 1.
Okay, thanks, Ms. Knowles. Any questions about Basel 1? Because it's we talked about capital adequacy. That's the bank have to have a certain amount of capital there to match its rated assets. And tier 1, tier 2, they are also very important for you to, so make sure pay attention to it. Basel II, in 1988, Basel Accord improved the way capital requirements were determined, but it does have significant weakness. Under the Accord, all loans by bank to a corporation has a risk weighted of 100% and requires the same amount of capital. A loan to a corporation with an AAA credit rating is treated in the same way as one of a corporation with a B credit rating. Also, in Basel I, there are no models of default correlation. Basel II, in June 1999, Basel Committee proposed new rules that have become known as Basel II. These were revised in January 2001 and April 2003. A number of quantitative impact studies, QIS, were carried out prior to implementation of new rules to test them by calculating the amount of capital that would be required if the rules had been in place. A final set of rules agreed to by all members of the Basel Committee was published in June 2004. This was updated in November 2005. Implementation of the rules began in 2007 after a further QIS. Basel II has advantages and disadvantages for banks. One clear concern is the year before it came into force was the cost of compliance and the additional system that banks need to set up purely to measure the factor that the Accord concerned itself with. This advantage was highlighted by credit crunch. In a recession, banks, instead of lending more to aid recovery, would be constrained to lend less as credit risk and credit rating around the world deteriorated. Well, we know when is a credit crisis, or when the banks have a lot of delinquencies, or when there's no money in the country, banks not going to lend. When there's the liquidity is good, banks will lend at a lower rate. But when there's not, the liquidity isn't there, the banks will therefore lend, but you're going to be paying a higher rate. So, and we know with after in 2000, that's when the different POCA acts, the different AML laws came into play. There are three pillars in Basel: capital adequacy, entire scope of Basel 1, credit risk, operational risk, and market risk. So we know in the three pillars, we have capital adequacy, entire scope of Basel 1, credit risk, operational risk, and market risk. We have supervisory review, increase in disclosure of information, also known as market discipline. These three pillars also have risk in the banks are covered appropriately. Three options. These three pillars also have three options. These three options are standardized approach, internal rating based approach, the advanced internal based approach. So with Basel have three pillars. Then in these pillars, we have options. So as we can say, central bank is the supervisory committee that makes sure that banks are upholding, making sure that banks' liquidity is where it should be. Every bank have every morning they have to do a liquidity report that goes to central bank. Central bank, the liquidity is done. I know there's a quarterly or a quarterly report where the bank has to send to central bank detailing their reserves. The central bank sets out what your reserve will be, because like they look at all your deposits and they say, okay, this is what your reserve, because you know a lot of people don't know deposits is not an asset, it's a liability to the bank, because the bank, any customer can come in at any time and say, okay, I want my money. I have 3 million. I want my 3 million. Banks use clients' deposits to give loans. And we read before where the bank would give a client a loan at 6%, but they paying the customer on their deposit 1%. So who's winning? The bank is winning. They win 5% extra on a mortgage loan when they're only giving the customer 1% on the deposit. So banks use customers' money to make money, and they make their money by giving loans. They can give a cash secured loans. They're paying some interest to the customer, but they're also getting some interest on the loan, the cash secured loan they're giving the customer. So bank make monies from the fees, administration fees on loans. They make money on checking account fees. They make money on, if you don't have, the bank says that, okay, you need to have in your account $500 every month. So if you don't keep that there, you find yourself paying some $3 and something for maintenance fees. So banks always win, and that's the reason why we have to have regulation, and that's the reason why we have different products and services offered by different banks, different companies, and that's why we have to have competition. So I can go to First Caribbean Bank and get a mortgage loan at 5%. Then I look at Fidelity Bank, who wants to give me a loan at 8%. So I have where I can make choices. So we can make choices. That's why competition is there, to allow customers to be able to make choices regarding products and services offered by institutions. Ms. Nan, can you pick up Financial Service Authority in the UK for me, please?
Yes. The primary source of framework legislation governing the regulation of banking and financial services in the UK is Financial Services and Markets Act 2000, FSMA. While the current UK regulatory framework derives mainly from the FSMA and related implementing legislation and rules, it is also substantially influenced by and to some degree implements various European laws which set minimum requirements for the regulation of banks and banking services in the European Economic Area, EEA. An increasing proportion of the framework is established by European regulations, which are of direct effect in the UK. In particular, Regulation EU 575-2013 on prudential requirements for credit institutions and investment firms, CRR, together with Directive 2013/36/EU on capital requirements, which implement Basel III. The main primary source of capital, liquidity, and leverage requirements in the EEA.
You were finished?
Yes, ma'am. Unless you want me to go on the legal.
Yes, please. Yeah. Yes, please.
Okay. Legal and regulatory frame in the Bahamas. Banking is one of the most highly regulated industries in the country and often challenges us to remember the goals of our commitment to compliance. But if it means preserving the customer's rights, preventing illegal acts such as discrimination or criminal activities, and supporting the integrity of the customer relationship, then compliance is more than just abiding by banking rules. It involves meeting our challenges with the delivery of superior products with unsurpassed quality, customer service, and in a manner that maximizes shareholder value. The FSC Financial Bank, Bahamas, is located West Bay Street, New Providence, and the Bahamas FSC is financial institution, which is regulatory by the Central Bank of the Bahamas. The government of the Bahamas, the Central Bank of the Bahamas, and the Financial Intelligence Unit have passed and issued a series of anti-money laundering legislation, regulations, and guidelines designed to address the concerns that certain monetary transactions may be attempts to launder money from illegal operations or finance terrorism. Among these legislative and regulative initiatives and guidelines are the following.
Thank you, Nan. Thank you.
Okay.
Okay. And like we know, like I say, from 2000, money laundering, a lot of that, I don't know, like Miss Knowles, in Commonwealth Bank, have you all ever had situations where you had a customer come in and you know they're money laundering? What do you do in a situation when you know a customer is money laundering? What is your responsibility as a banker?
Well, we now have what you call internal, if, I've never experienced this, but I know we talk about it every month. We have a meeting where they said, if the person goes outside of their deposit, you can tell by the level of activities. We have something in place called level of activities. If they go over that level, they have to come and sign to say, I'm at level A, B, C, D. So if they move up from A to C, the question is, you're gonna have to prove where you got this money from, one. Two, you're gonna have to do a source of funds for the funds. Persons will go from one branch to the next depositing. You won't catch it because they stay under the minimum of the 10,000. Sometimes they'll bring in 8,000. We were taught that you are a, what you call it? A waiter, but you're always coming in here every 2 weeks, depositing 8,000. That's highly impossible. That's a red flag. So We then turn it over, we report it to the supervisor or to the internal BIC. And from there, it just comes out of our hand. It goes up to head office gets it, and then they take it to central bank. Central bank gets involved, or the
Central
FIU.
Bank,
Not central
FIU,
bank, FIU.
FIU. Right.
Sorry, FIU. I always equate them with central bank. Sorry, FIU.
Oh,
That's a different
FIU
unit.
is
That's
that,
a totally different unit.
right? Because FIU is there for, you'd see like sometimes they'd send to banks and they'd say, okay, they freeze in person's money. FIU does that, have that. So they will say, okay, this drug person, this person, we need all the history on this customer account. We need to review all their deposits, all their withdrawals. So that's a task that compliance usually is tasked with the MLRO. They usually tasked with that because when they extraditing or they blocking somebody account or the government freezing someone account, they go to the banks and they send letters out and say, Peter, Paul, John, these are the persons, their accounts has to be frozen and we need all documentations on their account. And so FIU does that, yeah. And now we see legal and regulatory framework in the Bahamas. The Proceeds of Crime Act 2000 and the amendments, POCA. This act criminalized money laundering related to proceeds of drug trafficking and other criminal conduct, and requires that the financial institutions and their employees inform the Financial Intelligence Unit or the Commissioner of Police of any suspicious or terror-related transactions. Right, but like you say, persons try to beat the system by going to different branches and depositing and trying to beat the trying to stay within the threshold. But at the beginning of another day, that's why compliance come into play, that they would be reviewing customers' accounts, and they, even though that customer might have gone to different branches to make that deposit, but one account number is going to show, and it'll show what this person made 1, 2, 3, 4, these different deposits trying to stay in the threshold. So here again, that's a red flag. Why are they doing that? Then you'd have persons who, like we know, when you open an account, they would say to you, okay, how much you think you'll be depositing every month or every week? They'd ask you those questions. And so you say, okay, I think for the month I will only be depositing like $5,000. And so when you come out of that threshold, then that's a red flag that I think for some banks, it doesn't allow you if your account is over the limit, because right away it gives a flag and the teller would say to you, you cannot make a deposit. They'll tell you that. And the only way you can make that deposit if you get approval, because it happened to me. And they'll say, well, okay, Ms. Smith, you said this is what you'll be depositing every month, 15,000 every 2 or 3 months, but now you're bringing a check for XYZ. So I would have to say, okay, I'm building, and this is a stage payment I got to be able to buy my materials and stuff like that. So I have to get a letter from the bank where I got the loan from, bring it in, and then you're able to say, okay, now we see the check and we know what it's all about. But that's out of the range of what I said I would be depositing. So stuff like that. And that's why it's imperative that CSRs pay attention, because red flags actually come on the system and sometimes people just override them and don't check, and so that there creates an operational risk right there. The Financial Transaction Reporting Act 2000 and Amendment FTRA. This act makes it mandatory for financial institutions to verify the identity of existing and prospective clients, maintaining identification and transaction records for a specific period of time, and reporting suspicious transaction. Have any of you had been in a situation where you had to report a suspicious transaction and then you had to do a SAR, or you had to report it to compliance and they take it from there? Have anybody had to do that? Miss Burrows?
No, ma'am.
Miss Burrows?
No, ma'am, I'm here.
Did you get your results? You got your,
I did. I got mine.
I know
I
you'll be
got it.
asking questions. So let me say to the class, you do not get midterm papers back. Okay?
Okay.
Midterms and finals don't go back.
Okay.
Quizzes and assignments, that's fine. But the midterm, you won't get it back. And then the final is always cross-marked by someone else. So I should say to you all, the last day of class is the 18th of April, and that is the last day of class will be your exam. Okay, so your exam will be on the last day of class. Like some lectures, they 2 weeks later, no.
So will
Your
we ever
exam is,
see you?
oh, would y'all see me? No, no, no. I don't. I mean, like I say, for me, I may come by this to collect my paper that night when y'all take your exam, because so I can mark them and have them cross marked so you can get your grades. You know, but you won't. Like I said, I probably come by BIFs because I still gonna have to come to them for my papers. Unlike when you take the quiz online, I can easily mark it online. But no, I have to come by BIFs to get my papers. So probably that night I will come and get my papers from BIFs because both classes will be doing exam because business or banking that Monday is a holiday. So they're gonna have to do their exam on that Tuesday also. So I just have to speak with BIFs, but they're gonna have to do the exam also because Monday is a holiday. Yeah. So I probably just come by to get both papers. Yeah. But
Miss
yeah, I
Smith,
just yeah.
our exam Monday the 18th though.
Yeah.
That's Tuesday. Tuesday.
That's a Monday.
Yeah, that's Tuesday.
That's a
No,
Tuesday. The
that's a
Monday is
Monday.
that's a Monday. Hold on.
Yeah.
What calendar I was looking at?
I
Hold
going
on.
away and I coming back on the 18th. So
Yeah, you
Tuesday
must
be
be
the
carrying
19th.
your book to study, eh? Eh? Or you taking your exam before? Which one?
Tuesday's the 19th.
No, yeah,
Okay, the
Easter
19th.
Monday is the 18th.
I was looking at the 7th. I was looking at March 8th. Let's look.
Must be.
I must see because hold on. Let's go. I must be looking at March. Oh, okay,
No,
April.
that'll be for the March.
That's it. No, April. I was looking at the yes. The Monday is the 18th. That's a holiday. So
That's a
who
holiday.
all of classes when y'all have classes?
Your class on Tuesdays. That's the 19th.
Right. So no, I mean any other class, y'all have my class on Tuesday. So yeah, the exam will be on the 19th. Y'all have your fun on Easter Monday.
All right.
Every time used to be when I was doing my masters, every time a holiday I had to have exam. I used to be like, why can't I never just do something on a holiday? Always was an exam.
That's the 19th of April?
Yes. Classes supposed to finish on the 18th. That's a holiday. So classes will be finished on the 19th. The majority of lecturers like to give exam like maybe the next week, like the 25th or something. Me, I just give you the exam that night because I know when papers have to be cross-marked, you have to find people to cross-mark those papers. So I give you all your exam on the 19th. I try to mark it by the 20th. And so I could give your papers to someone, another lecturer, to cross-mark. And I don't,
That's me.
so they're, huh?
This means everybody already passed the class though.
Pardon me?
Everybody already passed the class if you already passed all these stuff.
Yeah, but it's the final exam you have to pass too. Remember, that plays a percentage. You'd see midterm plays a percentage, the quiz plays a percentage, and the assignment plays a percentage. So all of those are added together.
So when
and
we
like
get
I say,
when we get a certain percent on them three, we know we have to get a certain percent on the final.
right? Yeah. Yeah. And like
And
I
the
say,
passing. That's all.
I could never see persons, and with the certificate course, the passing mark is higher than the diploma course. I think in the diploma, I'm going to get it to tell you all exactly, but I think the diploma, the passing of 55 is a C. But in the certificate, I think with business or banking, it's higher. If they get a 65, that's like they get a D.
That's a pop.
But in the that's a D. In the certificate, in the diploma, a 55 is the actual passing mark for risk management and insurance there. Because I
55%?
remember, yeah, yeah,
Wow, that's low.
55. Yeah, but
Meaning
that's
that's
the
how much.
diploma. But with the
Meaning that's how much the percentage is for the final exam.
no, that's how much you could get to pass. Because some people I've known, like a lot of persons who never come to class or who was always busy working, and they didn't take some of the class like assignments, or some miss out one or two assignments. But when they did the finals,
Mm-hmm.
they did very well in the finals, so they were still able to pass the class.
Wow.
Yeah. Because it's like, even like with the masters, if you do the masters in the UK, because the UK is so hard, their passing mark in the UK was 40 for the charter banker, because it's very hard. It's so hard. It's not like the US. The UK is very hard. So when you get a merit in a class or a special credit, you have to say thank you, Lord, because the UK is very, very, very hard.
And the Bahamas just like that.
Well,
I
COB.
going to say.
The Bahamas, we just go through the ropes, and when you go to the States, it's simple, simple,
Yeah.
simple.
Yeah, yeah. Like even with the schools.
Yep.
Yeah, yeah. It is.
Let's
Yeah.
go to Bahama.
Yes. Hello. Yeah.
Tanika.
Yes,
Yeah.
ma'am. Miss. Yes. But I wanted to know, when we complete the class, do we get like a certificate or something?
When you complete this class, I'm not sure, because I always know risk management and insurance is part of the diploma course. Now you would have to speak with Miss Dean, because are you in either of those, the diploma or the certificate course? No, right?
I don't know. I'm not in the diploma course, and I don't know what a certificate course. I
This
just
Okay,
is
took
the
so
this
certificate
class
course.
independently.
yeah, so then I guess they should give you, I'll speak with Miss Dean and ask her, but it should, because you're doing it independently. It's not like something you doing the actual diploma or the certificate. But two, see, a lot of people get this risk management and insurance mixed up with risk manager. That's the course which you pay almost $5,000 for.
That's what I thought it was.
No, that's the course you pay almost 5,000 for,
That's the international
4,500.
one, right?
Right. Yeah. That's the one that is international, that is taught by lecturers here. And I think a guy from, I think he's from away. Yeah. But that is the course that I see so much people take over and over. So yeah, it's a lot of literature. It's a lot of work, but people do it. And you touch on some of the things, like you'll touch on Basel, you'll touch on credit risk and stuff like that. So that's a part of it. You touch on them, but then you touch on a lot of stuff where you're doing a lot of practical work in that course. Yeah, you're doing plenty of practical work in that course. But I know some persons who've actually passed it on their first go, and then some persons who had to take it once or twice. Yeah. But I just wanted you all to know that exam will be from chapter 6 to chapter 10, I think, or
So
11.
what's the passing mark for this class?
Chapter
I tell
10.
you, I tell you, I think it's 55.
For this class,
And so
55%?
that's a C. You don't want to get a C.
No, but I mean, that's the passing off for the spot.
I want no C.
But you don't want to get a C. That's the lowest. You want to get
No, I
a
ain't getting
90
no
something.
C-mark. Yeah,
Okay. Okay. So you got to work hard to make sure that you achieve that 90 something. Some people will say, oh, I get a C. That's good. Mm-hmm. Yeah. But a passing mark is 55. And like I say, some people just scrape it and they don't mind. Yeah, because they know, especially if their employer is paying for it, well, they have to get a C. Miss Forrest, you paying for your own class or your employer paying for it?
No, my work paying for it as long as I pass.
And you better pass. You know, HR throw you under the bus.
Quick.
Under the bus. And
And
your
there's
boss
more
will
than
throw
one
you.
class, so I don't need to pay nothing. Lord
Huh?
help me with my other class. I don't know. Well, anyway.
Or somebody was talking about that last
Mm.
night in my business of banking class. Say she passed by the skin of her teeth.
Okay. I need it.
So you
I
already
even
took
need
your
it.
exam?
No,
Or you
nope,
been taking it? But I
no.
knew it, so he didn't arrange for you to take it.
No, he told me try to reach Miss Dean, and I've been trying. I left messages.
You want me message Miss Steen?
Please.
Okay, I'll message her. I'll call her.
Yeah.
Okay,
I'm not
so
able
she
to
can.
maneuver, my
Yeah.
situation. I'm not able to maneuver. So I
Okay.
was trying to, we could negotiate something. We could set something up. But
Yeah, because I'm sure she would. Yeah, and so I'll speak with her. Or Mr.
okay.
Friday. Yeah.
Yeah.
Yeah, I'll speak with them. Yeah, so we understand what is, like I say, I'm going to try for the 19th of April to have the exam done. So the 20th, by the 21st, the latest, I have the papers to Miss Dean to have someone else, have another teacher cross mark. And then after the person is cross mark and make sure all your fees are paid, then Miss Dean will give you all your grades. They don't allow me to give you your grades. They have to make sure you pay all that fees first.
She get black eye. So you're gonna give us a study sheet?
You think
Yes.
so? Why you think I should be doing that?
Yes, ma'am. That
We
helped a
will
lot.
see.
I love you.
And it helped you all to read.
Yes, ma'am, it did. It actually did.
Mm-hmm. It helped you all to read. Yeah.
Yep.
It
Go
helped
to
you all to
Bahamas
read.
again.
Hi,
Yes,
Miss No.
Miss Smith, I
Hi.
wanted to know, I see week 12, we have class on Monday, the 4th, and week 13, we have class Monday, the 11th. That's a typo as well, or we
That
will
may be a
continue having class
typo.
on Tuesdays?
No class on Tuesday, man. I must see a typo.
Okay.
Yeah. Class on Tuesdays. Yeah. Yeah. Can y'all hold on 1 second?
Five more classes. Let's drag this out. We only need 10 chapters. A monster needs to stay on the table. She is. Pension plan. Yeah, she wants to talk about this pension plan. I need to know about. So, this is okay.
Yeah, so once we finish this chapter, we should be able to go on to chapter 9, which totally deals with risk. So you know what you have to study. And like I say, we'll see about the review questions. We'll see. Everybody was pleased with their results.
Yeah.
Yes, ma'am. Let me go back. My email.
Okay, where we stop? Where did we stop? Okay. Lee, where did we stop? Okay, right here. Miss, who am I gonna get to read? Miss Brown Knowles. How much tree Knowles in this class? Bow
Well, that's what
Knowles,
nobody
Brown
risk.
Knowles. Okay, Miss Brown Knowles. I see her, she drop off it. Miss Burrows, you up to reading or not?
Yeah, I can read.
Okay, can you continue for me then?
What page we on?
I think is I finish well, my book might be different. Mine say 231, page 116. It's might
Be
be
on the
different.
future regulations.
What's the page number?
119.
Oh. Okay. All right. The future of regulations,
You sure
financial
we there?
market.
You sure we there? I thought we was
I don't know.
No,
still
we
I
are
talking.
came
legal and
in when the
regulatory
lady was
frame in the
reading.
Bahamas.
Pardon me?
Which page is that?
That's 231, legal and regulatory frame in the Bahamas, the financial transaction reporting regulations
Right,
2000
yeah,
and amendments FTR. Because I have no notes next to this. I have my notes,
yeah,
but I have no notes on the reading.
231.
yeah.
Try 231, yeah.
I don't even have 200 in my book.
I went to say, I don't know if that is it.
No, it's the slide.
The
Okay,
slide.
yeah. Legal and regulatory frame in the Bahamas, the financial transaction reporting regulations 2000 and the amendment FTRR. These set out the information financial institution must obtain to satisfy customer identification requirements mandated by the FTRA. The Financial Intelligence Act 2000 and amendments FIUA. These acts establish the Financial Intelligence Unit as the agency for obtaining, receiving, analyzing, and disseminating information related to the PACA and the Anti-Terrorism Act.
You find it?
Continue?
Yes, please.
Okay. Legal and regulatory frame in the Bahamas. The Anti-Terrorism Act and Amendments 2004 as amended. This act criminalized terrorist, financial, and mandates the reporting of related suspicious activities. The transactions reporting wire transfers regulations 2008, FIU guidelines relating to suspicious transactions and the prevention of money laundering and the financing of terrorism, March 2007. Central bank guidelines on the prevention of money laundering and countering the financial or of terrorism issued in draft March 2009. Bank and Trust Act 2000, which covers the licensing and governance of all financial institutions within the Bahamas.
So we know all of these different acts, they were implemented in 2000, from 2000 because of money laundering and to ensure that banks, and we know when we go to a bank today to open an account, how much things we have to carry, all these different forms we have to fill out. And what Ms. Knowles, what is the requirement now to open an account with Commonwealth Bank? What documents would a customer have to bring in to open an account?
You have to bring in, for us, just 2 forms of ID, your NIB and your passport. Now, if you have the
Suppose I don't have no NIB.
if you have the e-passport, you just have
Right.
that. But if
Okay.
you have the old passport, you need 2 forms of ID and the NIB counts as one.
Okay. But suppose I don't have
Because-
no NIB card.
Oh, then you have to go to the NIB. You have to go to NIB and get one.
I don't have
Yes,
one.
ma'am.
Somebody
Now-
stole mine.
So you can go to NIB and they will give you a letter because right now they
No, I
don't
had to
have
go
any.
to the police. No, the police had
Oh,
to give
yes,
me a letter.
sorry. They
The
have to give
police
you a
had to give
letter.
me a letter, and
Mhm.
then I had to go to NIB,
NIB.
and then they had so much crazy things. I ain't get the card yet, and I ain't never gone to go look for it. I sorry, I ain't look for it either. I put it in, fill it out, do what they tell me to do. Nobody called me going to the sports center, get no card. Me and have no NIB card.
If
I
you
don't
have
have none.
passport, you wouldn't need your NIB. You would just need your new passport because that
Yeah, the e-passport.
they have the
Yeah, I have
NIB.
the e-passport. Yeah, that's the NIB number in it. Yeah, I have that. Mhm. So I only need
But
that
you
to open an
realize
account.
the last two passports have your NIB number in it. You
Yeah,
know that, right?
Yeah. Uh-huh.
But
It does, yeah.
unfortunately, the passport office was making errors. So a lot of persons' NIB numbers in their passports was incorrect.
What?
That's why we don't accept that by itself. We still have to accept it with an NIB.
Whoa.
Yeah, we had a whole special thing on to fix that. We had several customers with the same NIB numbers. The
What?
passport, yeah, the passport had one number and the NIB card had another. So we had to stop accepting those. That's why if you notice the last passport we had, they quickly changed that within 3 years. You had to get a new passport. That's because they had someone in there, they were transposing the numbers incorrectly.
And then the person, the second checker didn't pick it up.
Yeah, that's government. That's government. They work how they want work. Yeah.
Yeah, that's yeah.
So that's
Yeah,
why. So we don't.
So
we
Miss
don't
Burroughs, you
accept
say if
them.
I have my passport, I need nothing else?
Your e-passport.
Right.
Yeah.
The new passport. No, you wouldn't need anything else.
Okay.
That's
I
for
just have to fill
Bahamian
out all.
citizens. That's only for Bahamian citizens. So if you're not a Bahamian citizen, then of course you would need other documents.
Okay. Okay. Oh, I need to ask. I asking Miss Burroughs, if I wanted to add somebody to my prepaid visa, what do I have to do? You remember I was trying to do this. I know you say make an appointment, but you ain't there. So can I go online and do that? Hi, Miss Burroughs.
Yeah. You can. I could send you an email of who you can email
Okay.
to
do
get
that
an
for me.
appointment. Yeah, I'll send it to you.
Yeah, because I need to do that. Yeah. And so much things has changed. So
Whoever you going to add on, they'll need their KYC information document.
he has a loan there, honey. He has everything there.
Okay.
He have
okay.
everything. Yeah, he have an
Yeah.
account. And his salary goes there, comes there.
Yeah.
Yeah. All right. So Miss Boris, you can pick up where it says future of regulations.
Remember my book, don't y'all have to, because I didn't see where Nose was reading from.
No? What kind of book you are?
Tell me what the page number is.
It's 118.
Okay, 118 now. Okay, hold on. All right.
So we on page
So-
119 now.
Okay, 119, that's the future of regulation.
Right.
Yes.
Yeah. All right, financial markets are global. Financial regulations has historically been domestic. This comes as no surprise since financial regulatory regimens fall under the umbrella of public law, developing a direct relationship with the sovereignty of each state. Even after the Great Recession, in the aftermath of which national regulators coordinated more consistently, there can be no absolute mutual interest and, therefore, no single binding rule book or international supervisors. The fundamental question is, can Reputational blows provide the necessary leverage to force regulators to put in place regulation in line with international standards. Even when states do harmonize their law with the global norms, the adoption procedures are lengthy and complicated. It was deregulation that made finance global. A decade after the crisis, the international community is struggling to find a way to re-regulate the market as an aggregate, further enhancing its international nature. Differences surrounding the role of capital attraction and regulatory arbitration are making increased cooperation difficult. When it comes to financial regulation, not everyone is promoting the same agenda. First steps
Uh,
toward regulatory, you said stop?
no.
Oh, first steps toward regulatory cooperation. The establishment of the Financial Stability Board, FSB, was the first official step toward greater regulatory cooperation. Data reporting was enhanced as Basel,
Basel tree. Basel tree.
Basel
Basel.
III incorporated methods to identify and gather information for important banks. The integration of data collection and analysis became vital in tracking risk. Before the financial crisis, the regulatory system faced one major challenge. Although the standard-making procedures was international, the supervision of implementation was still domestic. The FSB and the Basel Committee did not have the necessary international recognition to impose sanctions on states that did not comply. Neither institution had the legitimacy to supervise the implementation of the regulation. The repercussion of not adopting the regulatory rules was a reputational blow, which had immediate consequences on the prestige of the regulatory agencies and banking sector of the non-complying states.
Okay, thanks. What do y'all feel about with Russia and Ukraine? Now they're saying that Russia won't be able to meet its financial commitment. The IMF will be stepping in. Russia is not able, I was reading something, Russia is not able to meet its financial commitment. What happens when a country not able to meet their financial commitment? Say, for instance, us, if we're not able to do, what's going to happen to us? What will
Their
the
financial
IMF?
commitment to what?
Blacklist.
Yeah, we get blacklisted
There,
and we
you
turn into
forget
junk status.
we borrow all this money. You know, we borrowing, so we got to pay it back. And they say that's what's happening with Russia now. Russia will not be able to meet its financial commitment, and you know, because there are all kind of sanctions against Russia. So
Yeah, but all this war is for us to get into the digital world, you know.
yeah,
So
yeah.
all those sanctions and stuff really wouldn't even matter soon
Yeah.
because Russian money in crypto.
Well, like I say, what happens to us if there comes a point where we're not? You remember when
If we go into junk
new
status,
aren't we there?
or blacklisted.
We're
No,
there.
we're not in junk statuses yet.
We're not.
No.
No.
If we were in junk
we-
status, then we
hold
wouldn't be
on,
dollar
hold
for dollar. We right now we aren't
Hold
dollar
on.
for dollar, but we soon to junk status.
What our status is?
Our
They
status
upgraded us
is
back in.
yeah, they upgraded
Yes.
us.
Right before election.
Because I
Yeah.
know we had that going on. It was like, yep. And like I say, we would never want to get there because guess what? We would not. But and I know they were talking about
Our
when
governments
they
wouldn't
decided
allow us to get there.
when they decided that they were going to get rid of the pennies. Everybody started talking and saying, "Oh, that means our dollars could get devalued because see now they're getting rid of the pennies." I'm like, we have so much foreign reserves that I could not see that happening. Say for instance, look at a Jamaica. How much is $1 US, $1 US to their dollar? How much dollars?
$100.
100 and something? 100?
$100. One,
So if I have
$100
one
is
US,
10,000 in Jamaican.
what?
Yeah, $100 in US is 10,000 in Jamaican.
So if I need, I can imagine. So if I'm gonna buy a barrel of Kentucky, I wonder how much that costs. Couple thousand. Say. That's kind of rough, you know.
Yeah.
That's really kind of rough because I'm like, I could never see
We just have to
us.
start investing in crypto.
Um,
The dollar is thrown out of the picture.
So cryptocurrency.
Yeah. That's why, the Bahamas was the first to launch their CBDC, their digital currency
Mhm.
in the world.
Well, right, because I've seen a lot of ads and a lot of stuff talking about this cryptocurrency and trying to invest in it.
If you realize now, central bank hiring persons for their digital currency adoption unit.
Uh-huh. Okay.
Yeah. So
Okay.
we soon out of the money phase. That's like it's a transformation of wealth. Because back in the day in Jesus' time they used to do the cattle.
Yeah.
Cattle was currency. Then they had gold and silver. Then they had fiat. Fiat is what we in now. So our grandchildren and stuff, they wouldn't know about paper money. They'll know about digital currency.
Digital currencies. Yeah.
Right.
Because I know where I work, where I do my contract job, we have a machine there now that I don't think a lot of people are aware. Hi, feedback. I don't think a lot of people are aware that you can come there and put in all your coins. You can put in the pennies, but you're not going to get anything back for it. But you can put in all your coins, and once you get the receipt back, you take it to the customer service rep, and you get the paper money.
Right.
This is where I do a contract job, and they have a machine there. I think it's one there, one at Carmichael. They have it strategically located, but in the mall where I sometimes go and work from, they have the machine, and Central Bank is involved in it too.
Yeah.
Yeah, so they have the machine where you can come and put in all your coins and go. Once you get the receipt to say, okay, you put in $20, you can go to the
now
CSR.
you can actually transfer your SAN dollar from your digital wallet to your bank account now.
I don't even know nothing but the SAN dollar. I mean, the company that I work for, that I do my contract job, they deal with the SAN dollar. They do, but like I said, I don't a contract job, so I've never really. I guess later I will have to deal with it because I do their audit work, so I will have to do some audit work on it. Yeah, but yeah, I know my son works at Central Bank, and he said they can only purchase their lunch. They have their SAN dollar.
You have to use their SAN dollar card. Yeah.
Yeah. Because he said that's what. So he said he don't even know what he did with it. So now he's at the carry lunch because he said he need the SAN dollar card. So
yeah.
And like you say, everything is going to go that way. But what is going to happen to the older persons who don't want to do stuff like that?
We'll still have money per se, but eventually it'll be phased completely out. That's just like the bank book.
Yeah.
Realize the bank book gone.
Yeah.
And you still have old people coming in the bank and they want their bank book updated. Some of them still have them, but we don't even update them no more.
No.
Like we'll do that out of courtesy.
Okay. What bank is this? Which bank are you to?
UOB.
Oh, Bank of the Bahamas. Yeah. Yeah, but so Bank of the Bahamas already started that too?
No, we are actually getting ready to do our digitization like almost completely. So we're in that phase, but we haven't started issuing the SAN dollars yet. I don't know if they're gonna do it in this phase, but we actually upgrading our online banking and so forth, and our mobile. We're doing a mobile app and all that stuff now.
Okay.
Mhm.
Miss Burrows, what about Fidelity?
Um, hello? What do you?
Hi, I can hear.
Right now, Fidelity just have the online banking, and that's about it for now.
So they're not, they've not made any preparations to digital banking.
No, you
Yeah.
they the world
No,
actually still waiting on a certain regulation
yeah.
Oh, okay.
because you know they can do away with the SWIFT system and everything.
Whoa. Okay.
Yep.
Okay.
They,
Oh,
they
okay.
we can have the Ripple Net system come in.
The who?
Ripple
The
Net.
what? What is that all about?
That's a company that do cross border payments and it does it faster
Okay.
than the SWIFT system.
Okay.
Yeah, so you could
So we have
transfer
big
and
things
it's
coming.
cheaper because you can transfer
So,
like let's say you transfer $1 million to China, they'll charge
mhm.
you 50 cents and
Okay.
it'll reach there in 3 seconds.
What?
Yes. So you wouldn't
Gee.
have to wait
Oh,
days anymore.
okay. Well, I guess central bank really needs to upgrade and hire more people who
So you
will
guys
have
need
to
to invest.
regulate, this
Yeah.
industries.
We right now we are in regulations. You guys need to invest in crypto.
Okay.
Yeah.
All right. Yeah.
That's what the
News.
SEC and all them they in court with Ripple right now. And
Uh-huh.
Ripple is they're gonna win the case because that's gonna be the bridge of all currencies.
Okay.
Yeah.
Thanks for the info, Ms. Notes. Yeah. Well, I'm not in the banking system anymore, but that's good to know. Yeah. Like I say, when I saw the machine in the place where I'm doing contract job, I was like, what is that? And then, I saw central banking there, and I said,
Hmm.
yeah. So yeah, they now doing that, getting rid of those pennies. Still, you can put your
Yep.
pennies in it, but you're not gonna get any funds back for the pennies. But you'll get rid of it. But you can put your other coins and get
And
paper
that's
dollar
why
back.
FTX. I don't know if you're familiar with FTX.
Who's that?
That's the digital market that's over here now. The digital
Mm-hmm.
exchange market.
Oh
They
no.
came down here. They moved their office down here because the
Oh, that's
Bahamas is
the
actually
F.
one of the
That was the company that gave all those donations.
right.
Okay, I saw that. Yeah.
They moved their
Yeah.
office from
Yeah.
Hong Kong here because we're the only
Okay.
country right now that's really regulated to support
Okay.
the digital market.
Okay. Great. Good to know. Well, like I say, I guess with that they better have plenty regulation because the crooks will be on layaway waiting to see
They
how
they
they can crook the system.
they already start.
I know they will be on layaway seeing how they can crook the system always, and that's why some people the same way we go to work every day. The crooks go to work too. So the same way we do our job, they do their job.
Mm-hmm.
So
That's their job.
that's why
The crooks.
it's gonna really be a lot of central bank is gonna really, and the Securities Commission, and they're gonna have to really put a lot of regulations in place because as we know now, that's probably one of the reasons to why the central bank they don't have the currency department anymore at the central bank. They don't have that anymore. And now they don't have the currency department at the central bank anymore. And now you see how the central bank phase out, like how you could go and purchase, they would put it in the papers and you could go purchase bonds from them. You can't do that
Mm.
anymore. You have to now
No.
go through a broker company, a CFAL, Royal Fidelity, a
Right.
Leno.
Right.
They no longer have, you cannot purchase from them anymore. Like before,
No.
now they say the persons who have it with them, they're not gonna discontinue it with them until, I guess, until it matures, but
Mm.
or you want to sell, but they no longer, you can't go anymore to go to central bank and say, oh, y'all have this bond that is paying 6.75 and how much million, and I want to purchase that some out of that. You can't do that
Mhm.
anymore. You have to go to the broker companies like a CFAL or Royal Fidelity or Leno, and that's where you have to go to now invest in government bonds. Yeah,
Yep.
yeah. So it's
Soon,
yeah,
soon we might not
it's
even have banks. 'Cause the crypto digital world was coming. You could be your own banker.
whoa.
Yep.
Well,
You wouldn't need
that's something for
lawyers.
y'all.
You
That's
wouldn't
something
need
for y'all
bankers.
to think about because then y'all need to figure out the way y'all can enhance to make life better for y'all and your children. See
All I
me,
done
I older.
purchase
Me
crypto.
no worry with that. You already purchased some?
What? It's the
Do you
early
get
stage.
returns? Have you already gotten returns on that?
Yeah.
Okay. Because I saw something that the former minister Wells, he was talking about it, and then the former prime minister, they were talking about it. Good
Yeah.
investment. Yeah, I
They
saw
know.
it.
They know we're coming.
Yeah, yeah,
They know
yeah.
we're coming.
Well,
But well, once you get in early, if you don't get in early, by the time regulations and everything has already been done, you have
it's
to
going to
buy
be
it from
very
the bank.
expensive.
It's gonna be very expensive. You have to buy it from the bank.
Because I remember my younger son, he was saying he remember back in the days when they first, long time ago, and he said his friends say let's invest in crypto, and he's like when it was must see $1 or something. He say not me,
You
you know.
joking?
And he's
I I had a chance in 2009 when I came out of school. They wanted me to buy Bitcoin, and Bitcoin was like about
must
five
be
or
that, you
twelve
know, it's
cents.
Bitcoin. That's what it is, Bitcoin.
Right? It was like 5 or 12 cents, and I was like, man, that's a scam.
Yeah,
Oh man, I would have
that's
been
what
a
he said.
multi-millionaire
I
now.
think it was, I think it was Bitcoin. Yeah, and he said him and his friends, and they said no, me, I ain't doing that.
You know
And
how much
he
Bitcoin
now,
is now for one coin?
no,
Bitcoin just went down to 49,000. It was
what?
56,000 per coin
What?
just last year. Yes.
Jesus.
Mm-hmm. No rich. So,
Yeah, yeah. But like I say, that's knowledge when you get knowledge. But like he said, he when they'd ask him, it was $1, and he was like, not me. That's a scam, like you say. Everybody thought it was a scam. Yeah, so
yep.
people really didn't invest in it. Yeah. Miss Boris, you stopped at where did you stop?
What did you
Why
do this?
Chanel?
I stopped at page 121, the top paragraph, the role of International Monetary Fund.
This
You
is
want me to
so
keep
nice.
reading?
Please, I don't even know where I am.
Okay. This on page 121,
Okay.
right before the problems facing greater
Okay.
regulatory cooperation.
Okay.
All right. The
Okay.
role of the International Monetary Fund, IMF, and the hold on, let me put on my flashlight.
Yeah.
And the World Bank was critical, as those institutions actually exercised hard power, having the ability to decline lending to states that did not comply with the regulatory standards. It seemed that the international lender of the last resort exercised enough influence over the borrower so as to force them to adopt the necessary financial regulations. The problems facing
All right.
greater regulatory cooperation. It would not have been particularly strange for domestic supervisors to look favorable upon local banking institutions, although this was a development that the FSB and the Basel Committee should have predicted. Good faith and trust between the sovereign states outweighed the issue. On the other hand, G20 countries have set most of the regulatory standards, a fact that creates a serious problem of underrepresentation of some states' views. The intricacy of in the structure of the institutions combined with the historical refusal of states to allow internationalization of fields such as property and insolvency law made the insolvency procedure painfully bewildering, and slow, further enhancing the spread of the crisis.
Okay. Ms. Cartwright, you want to pick up from where Ms. Burrows left off, please?
Sure, no problem.
Okay.
The main issues that arise are generally related to the unwillingness of the state to give up their power and bestow it to supernatural or even international organizations. Even if such international agencies are established, will every country be represented sufficiently? If so, if the process of rulemaking and supervision will be slow and counterproductive, if not, will every country's needs be adequately assessed? A roadmap for the future. States always try to attract capital, sometimes using deregulation as an enticement. This is a strong argument towards more binding international regulation. At the same time, regulatory arbitrage is perceived as a huge cost saver for many international financial institutions. Will those countries influenced by their clients be willing to be part of such international treaties as to create international regulatory organizations? Creating a level playing field can be adventurous, even from a competition perspective. It is more important, though, to make sure that the international rules do not favor the most predominant institutions. Regulatory and supervisory differences may have created barriers to the free flow of capital, but at the same time have allowed smaller local institutions to survive the extreme competition from international banks. Customs, culture, tradition, and financial history need to be taken into account when integrating regulatory and supervising regimes. Sovereignty and the different needs and goals of each state should be considered when constructing international organizations that make the rules and oversee their implementation. With the development of genuinely multinational banks, soft law may not be enough to regulate the financial market. Principles-based law might provide the necessary flexibility in regulatory fields, but at the same time, it can allow counterproductive maneuvers on costly reforms. Fragmentation of regulation and supervision minimize the agility, hindsight, and rapidity of the reactions of the international community to global financial crisis.
Thank you. Okay, so that ends chapter 8, but I'm going to prepare an assignment for chapter 8 that I need you to complete so you're able to go back over. If there's anything that you're not too sure of, you'll be able to pick it up from answering these questions. And like I say, Basel 1 and Basel 2, Basel 3 is on its way. So all of these are just regulatory rules that the central bank put in place. So banks, when they have to report, because they have to report monthly, quarterly, semi-annually, annually, all banks have to do different types of reports that has to go to central bank, all banks. And that's why banks do have to ensure that they meet and make sure that their liquidity is always at what it should be. Because anytime, I've never heard of a bank here having to actually borrow from the lender of last resort, from the central bank. So some countries, I guess it happens, and some countries it don't. Yeah, but like I could safely say Jamaica. I thought Jamaica was actually, I thought they were doing better. I thought they, because I really thought, I didn't know the dollars was that bad. I didn't know $1 is worth $100 Jamaican. I never knew that. So I thought they were actually rebounding. I know in Barbados, their dollars a half. So if I have $10, that's if they have $5, that's $10 for me. So their dollars are half of what we have here. So yeah, my $10 is half to them. It's $5 to them. Their $10, I believe, is half of my $10. Yeah. So Barbados is not on par either. Yeah. They're not on par. Jamaica. Cayman dollars are more than US dollars. So Cayman is way out there. So if you go to Cayman with $100, that's $90 you're gonna have over there. So Cayman is out there. Yeah. Any questions? Any concerns? Like I say, I'm gonna give you an assignment so you're able to go over and read again. So things that you don't understand, you can come back to class and we can talk about it, because we have chapter 9, which totally deals with risk. And then remember, I have that chapter 2 that I want to give you all. I probably do that. You all have the handout for chapter 2, right? I gave that a handout that I gave you all, which deals with the mean, median, and the mode, and deviation, standard deviation. You all have that?
Yes, ma'am.
Yeah, so I probably give you all some practical questions, which will be on the exam to do for assignment, instead of giving you the regulatory framework. I probably give you questions. Once you read it, you'll be able to, most of you know what the mean, the median, and the mode is. So I will give you some practical stuff. So what you don't understand, at least we can go over, because I will try to put some practical in the final exam, but you will know what it's going to be, the same format. Okay. Alrighty.
We can't take our phones in the exam.
Pardon me? No, I don't.
We can need calculators for that.
But why do you think I can give you something where you have to need calculator? I may give you a string of numbers and ask you which one is the mean, which one is the mode, which one is the median.
Okay.
I can give you something and say, what is the formula for the standard deviation? So it's not something you're going to need a calculator for. I may give you it as a practice for you to get used to it, or to see how it works out in your assignment. But for the exam, I know you can't take calculators and stuff in. So I would give you a simple question, asking you what the formula is for standard deviation, ask you what the mean, or what the mode, or what to give you a group of numbers, and ask you what it is. I won't give you something where you have to actually work out a problem. Yeah. But like I say, we have chapter 9 to finish and chapter 10. So once we get at a comfortable place and finish those, we should be. And what I want to do I have in the back of the book the rating, but I'm going to try to look for the more updated one for you to see the rating. And so you're able, and I may ask some questions on that, but you will know the different country ratings. Okay. All righty. Miss Burrows, when you go back to work, you off for a couple months?
At the end of this month, I have another checkup. So.
Oh, okay.
Yeah.
Somebody was making me laugh, but you all how much money they have to bring in? I have to laugh because somebody in the other classes said, "Oh, I want to be. You all have any vacancies? I want to be a personal banking rep." And the person said, "You could go sell." You know how to go get them customers.
Oh, our targets. Yeah, it's crazy.
Yeah.
We the targets is ridiculous. So yeah.
So what happens while you off? You still have to go beat the tariffs? You still have to go look for customers?
No, well, I just won't get no incentives. That's all.
Oh, okay. All righty, class. Y'all take care. Have a good night.
All right, good night.
All righty. Good night.
Good night.
Good night.
Okay, videos.